안녕하십니까. 글로벌 모니터 안근모입니다. 중앙은행이 금리를 인상해서 경제를 긴축하는 데에는 두 가지 이유가 있겠습니다. 첫 번째는 인플레이션이 너무 높은 때입니다. 당연하죠. 두 번째는 경제가 너무 뜨겁게 성장하는 경우입니다. 경제가 능력 이상으로 무리하게 평창하면 얼마 가지 않아서 인플레이션이 높아지기가 쉽습니다. 기왕에 금리를 올려야 하는 상황이라면 그나마 두 번째 경우가 낫겠습니다. 경제가 워낙 강해서 금리를 올리는 거라니까 어쩌면 반가운 일일 수도 있겠습니다. 미국 연준의 9월 FOMC가 점도표 금리를 종전보다 높여서 내놨는데 그 배경이 딱 그런 식입니다. 경제가 예상했던 것보다 훨씬 강해서 금리를 당초 예상했던 것보다 더 높게, 더 오래 유지해야 할 것 같더라는 것이죠. 어쩌면 반가운 일일 수도 있겠는데 주식시장은 굉장히 불편해합니다. 두 가지 이유가 있는 듯합니다. 첫째로 주식들 중에는 금리가 높을 때 디스카운트가 커지는 게 있습니다. 미래에 훨씬 더 큰 돈을 벌 걸로 기대되는 성장주, 대형 기술주들이 대표적입니다. 연준 금리 경로가 더 높아질 거라고 하니까 이 주식들의 적정 가치가 자연히 낮아집니다. 증시가 불편해하는 두 번째 대목은 연준이 실수할 가능성입니다. 금리를 그렇게 높게 장기간 유지하다가 결국 경기 침체를 유발하는 것 아니냐 하는 걱정이 커진 것 같습니다. 제롬 파월 의장은 어떻게 설명하는지 함께 들어보시죠.
Good afternoon, everyone. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Colby Smith with the Financial Times. So right now, it's still an open question about sufficiently restricted.
We want to see convincing evidence, really, that we have reached the appropriate level, and you know we're seeing progress, and we welcome that. But we need to see more progress before we'll be willing to reach that conclusion.
And just on the 2024 projections, what's behind that shallower path for interest rate cuts and the need for real rates to be 50 basis points higher?
First of all, real interest rates are positive now. They're meaningfully positive, and that's a good thing. We need policy to be restrictive so that we can get inflation down to target, okay? And we're going to need that to remain to be the case for some time. So I think remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation, really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, but what it reflects, though, is that economic activity has been stronger than we expected, stronger than I think everyone expected. And so what you're seeing is this is what people believe as of now will be appropriate to achieve what we're looking to achieve, which is progress toward our inflation goal, as you see in the SEP.
If you're going to project a funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
It's more about stronger economic activity, I would say. I think broadly, stronger economic activity means we have to do more with rates. In terms of what the neutral rate can be, we know it by its works. We only know it by its works, really. Ultimately, you only only know when you get there and by the way the economy reacts. And again, that's another reason why we're moving carefully now, because there are lags here. Remember, what we write down in the SEP is the longer run rate. It is certainly possible that the neutral rate at this moment is higher than that. That's part of the explanation for why the economy has been more resilient.